Here is a summary of Bank of America's Q3 2025 earnings call, designed for clear, spoken delivery. Good day, everyone. Today, we'll review Bank of America's third quarter 2025 results. Key financial metrics and highlights. Bank of America delivered a strong quarter, marked by robust top-line revenue growth and a significant increase in earnings per share, driven by strong operating leverage. Revenue reached $28 billion, an 11% increase year-over-year. Earnings per share, EPS, was $1.06, up 31% year-over-year. Operating leverage, a strong 560 basis points improvement. Efficiency ratio fell below 62%. Return on assets, ROA, reached 98 basis points. Return on tangible common equity, ROTCE, improved to 15.4%. Net interest income, NI, on a fully taxable equivalent basis, NI reached a record $15.4 billion, up 9% year-over-year. Investment banking fees exceeded $2 billion, up 43% year-over-year. Sales and trading revenue grew 8% year-over-year, marking 14 consecutive quarters of growth. Asset management fees increased 12% compared to last year. Consumer banking delivered $3.4 billion in after-tax earnings, up 28% year-over-year, with 600 basis points of operating leverage. Global Wealth and Management, GWIM, posted net income of nearly $1.3 billion, up 19% year-over-year. Total assets ended the quarter at $3.4 trillion, down slightly from the prior quarter due to balance sheet tightening. Deposits. Total deposits ended just over $2 trillion, up $72 billion from the year-ago period. Loans. Average loan balances were $1.15 trillion, up 9% year-over-year, with commercial loan growth at 13%. Capital. CET1 ratio increased to 11.6%, well above regulatory minimums. Shareholder returns returned $7.4 billion to shareholders through dividends and share repurchases. Management commentary. CEO Brian Moynihan highlighted the company's consistent organic growth and the strength of its diversified business model. He emphasized that this quarter's results underscore the impact of sustained investments in technology, talent, and client experience. He pointed to the digital slides in the appendix, showcasing the application of technology, including AI, in client-facing activities like Erica, which is now operational at scale across the company. Brian expressed confidence in the company's trajectory and excitement for future opportunities. CFO Alastair Borthwick provided detailed financial insights, commending the team's expense discipline, which significantly outpaced revenue growth. He noted improvements in provision expense, with declining net charge-offs and a modest reserve release due to credit card and commercial real estate improvements, reflecting strong asset quality. Alastair detailed the organic growth across all business segments, from consumer checking accounts and card lending to wealth management client balances and global banking deposit growth. He also elaborated on the balance sheet strategy of tightening, which benefits net interest yield, and the company's disciplined pricing on deposits. He forecasted Q4 2025 NII to be at the higher end of the $15.50 to $15.70 billion range, and anticipates similar NII growth rates in 2026, driven by core loan and deposit growth. He also expects Q4 expenses to remain roughly in line with Q3. Future outlook and forecasts. NII expected to exit Q4 2025 in the range of $15.50 to $15.70 billion FT basis, representing approximately 8% growth from Q4 2024. Growth is expected to accelerate in the second half of 2025. For the full year 2026, similar growth rates are anticipated, driven by core loan and deposit expansion. Expenses expected to remain roughly in line with Q3 for Q4 2025. Efficiency ratio. Management aims to continue growing revenue faster than expenses to drive operating leverage and efficiency improvements. Further guidance will be provided at Investor Day. ROTC. Management expects to continue increasing ROTC with potential for sustained performance and upward movement towards peer targets. Capital markets. Pipelines are up by double digits, and the environment for M&A feels constructive. While Q4 typically sees a seasonal slowdown, client repositioning based on rates and policies is ongoing. Deposit beta. Expect disciplined pricing on the way down for rates, similar to the way up. Rate cut impacts from September will be seen in Q4. Significant risk factors and uncertainties. Interest rate sensitivity. A 100 basis point decline in rates would decrease NII by approximately $2.2 billion over 12 months, while a 100 basis point increase would benefit NII by about $1 billion. Economic environment. Management acknowledges uncertainties around tariffs and rates, but they are performing well against expectations. Regulatory landscape. Management noted the need for finalization on some rules impacting capital targets. AI implementation. While confident in AI's potential, management emphasized the need for careful, controlled, and precise implementation within a regulated environment, ensuring data appropriateness and model accuracy. Immediate efficiency gains from AI are not expected, but will be a long-term driver. Lowlights. No significant lowlights were explicitly mentioned during the prepared remarks or the initial Q&A. The tone was overwhelmingly positive regarding the quarter's performance and outlook. Most important statements. Brian Moynihan, CEO. Bank of America delivered a strong third quarter with good growth both in the top-line revenue and bottom-line EPS, all driven by strong operating leverage. He also stressed, "We believe applied technology, which includes a range of outcomes from the digitization that we show, and the customer adoption of technologies and interfacing with our company and technology always provides that." Alastair Borthwick, CFO. We're pleased with the continued demonstration of expense discipline across our businesses. He also highlighted, "We expect to exit Q4 of 2025 with an eye on a fully taxable equivalent basis in the range of $15.50 to $15.70 billion, noting that growth should accelerate in the second half of 2025. In conclusion, Bank of America reported a very strong third quarter, exceeding expectations across key financial metrics. The company highlighted its consistent organic growth, the benefits of its diversified business model, and the positive impact of technological investments, including AI. Management expressed confidence in continued growth and profitability heading into 2026.